Welcome to my channel, Learn and Earn, to live your life on your own terms. Hello everyone, you're welcome to my channel, Learn and Earn Academy. And today in this video, we are going to talk about balloon payment. Now, this is a concept which you must not have heard, but it's a very important concept, especially relating to banking. And all the people who work in bank must already be knowing about it. So let's start and see what exactly is balloon payment. Now, a balloon payment is a lump sum paid at the end of the loan term that is significantly larger than all of the payments made before. On installment loans without a balloon option, a series of fixed payments are made to pay down the loan balance. Balloon payments allow borrowers to reduce that fixed payment amount in exchange of making a larger payment at the end of loan term. In general, these loans are good for borrowers who have excellent credit and substantial income. Now, in very simple words, I'll explain to you. For example, you have taken 1 lakh rupee loan from a bank. Now, the bank has given you this method of repayment, which is balloon payment. So, what will the bank say? The bank will say that you have to pay this 1 lakh rupees in 5 years, and for every month, you have to pay the interest and the principal, whatever the amount comes. But this principal and interest will be a very small amount, and you'll be paying that for the next 5 years. But at the end of 5 years, you will make a big amount of payment, which will cover the maximum principal. So this is a loan arrangement which is quite good for people who cannot initially afford to make big payments, especially for business enterprises which are new. So if I'm a new company, I may not have good amount of money in the initial phases of my enterprise. Slowly and steadily, I would start to gain more profit, and then I would be in a position to make bigger payments. So it's an option, it is a convenience which is given to me by the banks. So initially I'll pay small amount of EMIs, and at the end of my loan period I will make the largest amount of payment. Now I hope this concept is absolutely clear to you. Now if I have to explain you in a much broader way, balloon payments are generally defined by being at least twice as large as regularly scheduled payments. By making one large sum payment, balloon loans allow borrowers to lower their monthly loan repayment cost in the initial stages of paying back a loan. Balloon loans usually have shorter terms than traditional installment loans, with large payment typically due after few months or years. Balloon payment structures are most commonly used for business loan, though they are also available for auto loans and mortgages. Now, despite the reduced initial payments, balloon loans are riskier than traditional installment loans because of large payment due at the end. As such, most lenders will only provide these loans to consumers and business with excellent credit, sufficient cash on hand, and stable income streams. A handful of states have banned consumer balloon payment mortgages and placed significant restriction on balloon auto loans. For auto loans and mortgages, borrowers must usually make large down payments to qualify. Now, this can be a very risky mode of giving a loan. Why? Because you are giving the customer an option to pay small amounts initially and the remaining large amount at the end of the loan tenure. But what if the customer doesn't have money even at the end? Then there will be a default. And since all the time has already passed and that was the last payment to be received, you will be in a soup. You will not only lose the interest for the initial period where you have taken small EMIs, but also your loan will turn into NPA, giving you nothing. So it's a very risky method of repayment. So if I have to give you brief points, balloon payment is lower monthly payments than traditional loans, high risk due to lump sum payment at the end, and it is usually restricted to most credit worthy and income stable borrowers. Now, even if a bank decides that I want to give this balloon repayment method to a particular borrower, the borrower has to be really good. The bank has to be convinced that this borrower will return the money at the end of the tenure. Only then the bank will give this. Now let's take example of mortgage. Now balloon mortgage allow the qualified home buyer to finance their home with low monthly mortgage payments. A common example of a balloon mortgage is the interest only home loan, which enables homeowners to defer paying down principal for 5 to 10 years and instead make solely interest payments. Interest only and other balloon mortgages are typically used by high net worth home buyers who have enough capital to afford paying down a large principal on a normal schedule. Now, most borrowers of balloon mortgage don't actually make the balloon payment when the low payment period ends. Rather, to avoid paying the large lump sum in cash, it is common to refinance into a different mortgage or sell the house. So, balloon repayment has been seen to quite effective use in mortgages. Now, let's talk about auto loans. Now, balloon payments are not as common for auto loans as they are for mortgages or business loan. However, lending restrictions are less stringent in the auto loan industry, so it's a bit easier for the consumers to take out this kind of loan. Now, many enter into balloon car loans thinking that they can sell and increase in their income by the when the payment is due, often leaving themselves unable to pay down the lump sum. So, while the balloon car loans help secure lower monthly payments, consumers tend to take out these loans for the wrong reason. It is important to remember that balloon loans aren't actually more affordable, they only spread the total cost out in a different way. So, there is no absolute guarantee that at the end of the loan repayment period you will have that entire lump sum amount. So, it is a double edged sword. So, you have to carefully think before going for this type of loan. Let's talk about business loans. Now, business often use balloon loans for short-term financing needs or for commercial real estate purchases. For the business that needs working capital and is waiting for large payment from a consumer, a balloon loan can be an affordable way to provide gap financing. Balloon loan can also be helpful for companies looking to move into new office before selling their old one, as the deferred payment schedule allows time to sell the old property. Now, this is where the business loan, especially taking the ballooning method, comes into picture, and it is very effective for business people who are moving to a new office but they cannot sell the old one as quickly as possible. Now, balloon business loan pose the same risk to business as they do for the consumers. For a business without a guaranteed income stream, it can be dangerous to take on a liability that demands a large sum payment. Although refinancing is an option to get out of a balloon loan, there is no promise that a lender will grant you a new loan if your revenue drops uh, or your industry takes a hit, such as manufacturing industry and the automobile industry. Now, there is a good chance that you will be stuck with large outstanding debt. So it is very risky as well. Now, let's talk about the positives and negatives of loan with balloon payment option. Now, balloon loans are complex financial products and should be used only by qualified income stable borrowers. For example, this type of loan would be good choice for investors who wishes to minimize short-term loan costs to free up capital. For businesses, balloon loans can be used by companies who have immediate financing needs and predictable future income. For the average borrower, it is risky to take out a balloon loan with the assumption that your future income will grow, it may not grow, and then you will be in big trouble. So, if you're looking to purchase a house or a car, a better choice would be to take and make monthly budget and take out a loan that you can pay on your current income. Alternatively, you can save for a bigger down payment if you are not in a rush to make a purchase, which will let you purchase a more expensive asset with lower monthly payment. So, if I have to give you the positives in brief, low or no initial payment enables borrowers to access affordable short term capital and can help cover financial gaps. These are the positives of balloon payment. And the negatives are that the cost of loan can be higher in long term, especially if the loans is interest only, poses more risk than traditional loans due to payment schedule, and there is no guarantee that you will be granted a refinance to switch the debt obligation. So I hope you would have learned a lot from this video, and this video would have helped you to understand this important concept of balloon payment. So if you like this video, you can press the like button, subscribe to our channel, and share it on social media. Thank you. Have a great day.